So the analysis is about Motilal Flexi Cap Fund. So it is in existence from 1st January 1995. Previously, it was known as Multi Cap 35 Fund. So the name change has happened probably some 5-6 years back. The present fund manager is Niket Shah, and he has been managing the fund since July 2022. So if you again the investment strategy is same to achieve the long-term capital appreciation, right? And the exit load is 1% if you are redeeming before 1 year. As I said before, like anything less than 5 years, you should not even be considering investment in an equity product. So for such people, obviously this is redundant. So the benchmark they are comparing with is against Nifty 500, and the present AUM of the fund is 11,717 crores. So if you look at the expense ratio, direct expense ratio is around 0.89%. The regular expense ratio is around 1.74%. So the of the remaining 90.95%, some of it will be going to the distributor, and some of it will be the marketing expenses extra, and any other expense which the fund would be incurring, right? And if your fund financial advisor is charging you anywhere around 0.75% plus GST, so his fee, combine that with the direct expense, you will end up paying something like a distributor fees only. But again, so whenever you are going for a financial advisor or a distributor, make sure that he or she is giving you the rationale behind why they are choosing the fund for you and what kind of asset allocation they are giving you. And the same time, is it suiting your financial plan or else a goal plan or not? Right. Now let's look at the analysis, how this fund has performed across the time horizons. Again, as I told you, the first 3 years may not be of much use for us, right? So ideally, we have to examine from the year 5, 7, and 10. So if you look at the median returns, so the median return wise, so Sensex has done slightly better, right? Even Nifty 50 has, or it has done something like a Nifty 50 return only. The medians and Nifty 100 and Nifty 500, everything is in a similar range if you look at it. So the regular part after the fees, obviously the return has gone down. So on a 7 year and on a 10 year basis, so again, the median returns were at 12.14% compared to 12.84% here, at compared to Sensex at 12.84%, and 12.36% at Nifty and 12.14 here and 12.77. Nifty 500 has done slightly better than Motilal Oswal Flexi Cap Fund. But on a 10-year basis, this fund has delivered an exceptional return. If you look at it, so the median return has been around 17.57. So this has beaten the benchmark hands down. So on a 10 years horizon. And on negative instances as well. So after 3 years, after 5 years, there are no negative instances, both on a regular side and on a direct side. But again, so but if you look at the medians on the shorter durations, that is 5 years, 1 to 3 years, it has done well compared to the indices, right? But on a 5 year horizon and a 7 year horizon, it has not done so well. Again, 10 years it has done well. The one reason is there was a change in the fund manager as well. Probably he might have improved the fund performance, or else maybe in the 2 years before the fund has delivered performance, there is a possibility that the return may not be good. We will look at why the fund performance was not good in the charts. Now let's look at the portfolio, the present portfolio, and how it was in 2016. This is a 10-year data on how the churn has been in the portfolio. Say for example, on January 25, this is the portfolio on January 25. So if you look at it, almost some 1 second. These 15 companies are making up to 83, 84% of entire portfolio, and 16% is in cash. Now, where were these 16 companies in the previous year? So of this 80, over 20% of the amount was not invested in these companies. If you look at Jan 23, so the investment of this 85%, only 25 percentage points is here. And if you look at the Jan 2022, Was only one single stock which was there in the present investments. That means in the last few years, the churn was like really very high here. So let's look at how it has done from Jan 16 onwards. Right. So in Jan 16, what was at 90%? So it was in 17, the same stuff. One second. So what was at 94%? The same stuff was at 76%. The churn was around 18 percentage points in a single year's time. And here it is only 65%. So here it is 57%. In 5 years time, 5 years time, half of the portfolio has gone out, right? If we look at a similar way, what has happened in the last 5 years? So what was around 85% in on January 2020? If you look at 2025, it is only 3% of it is present. That is L&T Limited is what they have, right? So in Jan 21, this 86% has become a 60, and Jan 22, this is at 46, and in 23, this is at 34. The fund has performed on a long horizons, but if you look at it, um, the churn is like really very high. Let's look at the fund performance from 2014 to 18, right? The divergence has started in the early months, and it has done really well. If you look at it, it has delivered very good results from on the point-to-point basis. And from 19 to 20, 19 to from 14 to 18, so the index has delivered an absolute return of around 72%, whereas the fund has delivered around 163% in 5 years' time. So from 2019 to today, uh, the performance has been like pretty much, if you look at it, it was flat for the first few years till 2021. So again, there was some divergence which was there positively on the side of the again, the divergence was there. Sorry, uh, uh, index has performed well from 2021 to 2024. So from 2024, there was some change. So if you look at from 2014 to today, on the absolute return wise, it has done really good job. So on over a 10-year horizon, it has given a 529% of absolute return on direct side. On the regular side, it was around 469%. Compare this with the Nifty 500, which has given around 300% of absolute return. But there was a change in the fund manager. This has happened in 2022, if I'm not wrong. Let me just. So 2022 July is when there was a change in the fund manager. So the fund manager's performance again till 2023, probably there wasn't many changes. So from 2023 onwards, you can see a wide divergence. So if we see here as well, so from 2023 to 2022, there was huge amount of change, right? So maybe the fund manager has been changing a lot of stuff, and accordingly he is getting, the results. Or else, let's just look at this one, right? So from 22 July is when he has joined. Yeah, 22 July. So if you look at the portfolio, so from 23 January onwards, the fund portfolio was his portfolio. So compared to the previous ones, there has been a lot of churn. So this fund manager probably prefers churning the portfolio and getting the results. That may be one reason. Uh, because if you see the data, there isn't much of whatever he was holding on January 23. There isn't much here, or else probably he's taking some time to make the changes and everything, because there may be some impact cost whenever you are buying and selling stocks. Given that the fund has a 10,000 crore AUM, even if you are investing something like a 10% into a single company, that means you have to invest around 1,000 crores, right? So 1,000 crores, you just can't take it out very easily, nor you can buy something very easily. So maybe that's the reason why he has been churning a lot slowly and steadily, right? So again, you have to understand that the past returns doesn't guarantee the future returns. Even before you investing, you have to do the due diligence about this fund and see if it is suitable to your asset allocation, the financial goals. If not, I mean, like if you are not somebody who is not finding time, maybe you should talk to your distributor or a financial advisor. So this video is purely for educational purpose only. This is neither a recommendation to buy nor sell the asset class in discussion.